What's up, Wealth Up Challenge? Hello, welcome. We are doing this challenge just for you, first responders from first responders. As you guys may know, being with us the past few days, my husband Michael is a first responder, and in the journey of our wealth creation, knowing that we wanted to allow him to pursue his passion, his career, and become a first responder and leave his safe, steady CFO position, we knew we had to know our numbers, which is what we talked about in day 2 of the challenge. We told you a little bit of our backstory in day 1. Day 3, Rami came on and gave us some great information on risk management and all of that kind of stuff, which is where we identified, hey, we can make this shift and this move with people like Rami in our lives because we know our number. We know where we're going. We know how we're creating wealth. We know what it's going to look like to go into, the accumulation and distribution phases of our lives and all of that kind of good stuff. And so having Rami has been a game changer in us owning self-storage facilities and working 2 full-time jobs to create and accumulate as much wealth as possible in this phase of our life. And we are so honored that you are here participating with us as we get to share the information we know, the things we've learned, as well as what our friend Rami has learned and brought into our life as well. So I'm really excited for day 5. I hope that you guys are tuned in, ready to learn, ready to take action and implement what you're learning. Hopefully you have a notepad, a pen, a paper, all that kind of good stuff to take notes. I know I've been doing it every single day. So if you guys are tuned in, ready to rock and roll, I'm going to pass it over to Rami so that he can get us kicked off and started today. So Rami, welcome back. Day 5, Wealth Up Challenge. Hello.
Happy Saturday. Good morning. What is going on, guys? Hey, Hall Mike. It's good to see you guys. And guys, it's great to be here on day 5 of the Wealth Op Challenge. Let me make sure you guys can all see me. And man, time flies when you are having fun and you're engaged and you're learning something that as a financial advisor, as an investment advisor, I completely believe is game-changing information, because it's not information designed to entertain you. It's not information that's just designed to share some ideas with you that sound good. It's actual practical strategies that are being implemented right now that are actually changing the reality for not just Mike and Hall, but for so many people that are actually implementing what you guys have been learning and who've already implemented what you guys are learning. And so, guys, I'm super excited because now we get to build off of not just the foundation of what we've talked about in the Wealth Op Challenge, which is the problem that so many first responders are having to deal with, and that I think can only get more challenging, which is having to figure out and navigate their financial future with the least amount of help from any previous generation. Because today, right, the burden of ability to actually be financially free is so much more on you and less on institutions and governments in the form of guarantees, in the form of rock solid pensions, in the form of, markets that are relatively stable as they go through these cycles. And so now, as you think about the level of transferred risk back onto first responders as it comes to trying to figure out and navigate their financial future and hope that things are going to be as they think they should be by the time they retire, the question is, what do you do? What do you do to make sure that there is an exit strategy, that there is an off-ramp when it comes to being able to have the income to make sure that you are okay, that your family's okay, and that your financial future is bright? And that's the whole heart and the idea behind the Wealth Op Challenge, behind Mike and myself and Shelly and Holly, our wives, is that, hey, look, we know how to, we've done and are doing the very things. We're practicing what we preach. And I've seen the impact of this in my clients' lives. And so we're bringing that to you guys. And so, guys, I hope you've really been paying attention to what we've talked about, because I want to summarize in just a couple of different examples, really the big aha moments from this Wealth Op Challenge over the last 5 days, and what we have in front of us in the next couple days as we actually now take the concepts and show you the reality of implementing this stuff. And so, in normal fashion, let me start us off with just some simple visuals that talk about, I think, one of the biggest and most important factors in thinking about your financial future. Okay. And that's this idea that you have to really understand what it is you're after as it comes to your financial ability to maintain your lifestyle. And guess what? You can only do that if you actually have a target, if you know that there's a desired number of what it would take. And I've given you guys that example of someone who says they need $10,000 a month. For you, it could be more. For others, it could be less. But just thinking about your life today and what it would take to get there, and the challenge that most people have in the strategies that they're trying to use to create wealth is they're just thinking about the lump sum value of their savings account, of their 457s. They're looking at these statements, and for them, their ability to create financial freedom and really truly have wealth is just dependent. Oh, my pen doesn't want to work. It's just dependent on the value going up, as opposed to the ability for this asset to produce consistent cash flow that can put up with the cost of living going up, that can put up with the risk of the market going down, that can put up with a potential rising tax environment, and still go through all of these things, and on the other side, produce the income that they need to maintain their lifestyle. And so we've talked about that, and you guys have seen how to transfer and transition from this passive investment mindset into a more active role in building wealth. And I've shared with you guys, Mike and I and Holly, we've shared with you guys that guess what, guys, there's a formula. There's a formula most first responders are not using that will actually help you create wealth and have more income and cash flow. And that formula includes understanding how to evaluate assets that have more leverage, because with more leverage, you need less time and you need less money out of your own pockets to actually create financial freedom. And I talked about how to do that in the stock market, guys, through risk management. So for some of you guys, you've already been implementing this. You've already reached out. We're already in the process with a lot of first responders of implementing risk management so they can see better returns in their 457s and their 401ks. And I'm going to talk a little bit about a secret sauce to this on a bonus day, guys, on one of my favorite short-term strategies that could actually be implemented in less than 30 days to start to produce more income as it relates to those retirement accounts. But we also talked about one of the most powerful ways to build wealth, and that is in real estate, and more specifically in real estate, utilizing storage units as a better investment property because of the trends that are unfolding with a third of our population in the United States being baby boomers who are all downsizing, and not just them, but people in general. And in that reality, most people will stop paying for their mortgage before they stop paying for where they house the things that they hold dear, the things they don't want to get rid of, right? A little bit of hoarding. But the reality is the data shows us the power and the ability for storage units to thrive in not just good times, but actually even better in recessions, which we may be going into potentially. But one of the things that should have stuck out, guys, is the traditional path that most people are on right now as we speak is the idea that by the time you retire, outside of your pension, any income you need outside of that, because guess what? Most first responders find out. The pension may not just be enough by itself. It's not just what the pension can pay you, it's what you're going to net after you factor in tax. And so any gap in income that you need to maintain your lifestyle, guess where it has to come from? It has to come from your tax-deferred investment accounts. So while I've shared with you guys the strategy that has statistically time-tested, proven to help our clients, our first responder clients, have 30 to 40% more by the time they retire, the reality is most people are trying to live off of the interest so that they don't run out of money. And that is a very challenging thing to do. It limits your ability to produce cash flow. So for most folks, if outside of the pension, all you had was this, guys, right? To generate $10,000 a month from investment accounts, you typically need about $4 million at a 4% distribution. And you can walk into any Charles Schwab, Morgan Stanley, Edward Jones, name the company that you like, that you've seen, Fidelity, Vanguard, and you can go talk to any registered investment advisor, any advisor like myself, any financial planners, certified financial planners, and 9 times out of 10, you're going to hear this 4% rule come up because of statistics, because of probabilities as the safe amount that you should never go above. So that's challenging. Yet what you saw with Mike and Hall yesterday is that to generate that same 10K instead of 4 million, Mike shared with us an example using their strategy and formula on how If I had 400,000 and a property that was worth 2 million, net of servicing costs to maintain and manage that property, I'd be able to generate about that same 10K. So look at that. What's the difference here with having to have 4 million and 400? Leverage. Leverage, because real estate and storage units are a system that produce so much more effectiveness and leverage that I need so much less capital to generate the same cash flow. You see, the focus you should take away when you're thinking about wealth is not evaluating investments simply by which one can, average a better return, make me more money as it relates to the value of my account going up, but instead, which one is more effective at producing cash flow, providing me more leverage, and being more tax advantaged. That's the transition. That's the mindset shift. Become an investor who thinks about things from first principles, from income first, because that's how you live your life. That's how you pay your bills. That's how you assess whether or not you can do things you want to do for your family and for others. It's based on the cash flow that you have, not just the value of your investments. That's the other side of the coin. And when you start to focus on that first, guess what? You start to make decisions that are more effective for you and your family. Does that mean, and here's the beautiful thing about what we've talked about here, guys, as I transition now, is that a question of, or does that mean I have to stop doing what I'm doing, stop contributing to my investment accounts, and just completely make a hard shift? No, it's a question of and. It's about being more strategic and tactical about how you say, hey, number one, let me take an inventory of where I am today financially, right? What path am I on? How long is it going to take me to get to where my family wants to be if I just continue on this path? Where is our money today? Number two, now that we know that, guess what? Are we okay with that? Am I okay with working for another 17 years, 18 years, 25 years, whatever it is, 10 years, relying and knowing that I'm going to be dependent on things I don't control for most part? Right? Am I going to be devoting any time and money to the conversation of investing and building wealth? And if so, am I okay? Or do I know that I need to make a shift? I need to do something else. And if I do need to do something else, what am I going to do? And we've shared with you guys the blueprint, the plan, guys. So today, I'm going to take that a step further. We're going to build on what we did yesterday. We're going to build on what we did yesterday, because yesterday we got a chance to see some powerful stuff with what Mike shared with us, guys, as it relates to what Holly and him discovered, why they avoided doing what most people do when it comes to investing in real estate, taking the conventional advice, buying single family and multifamily, and instead finding a niche, a silver lining that was way more powerful, way less overhead, way less maintenance, and produced better cash flow in the idea of storage units, having so much more effectiveness. And so I want to actually put, though, some numbers behind that. So what I asked Mike to do is to actually walk us through the history of the last decade of Holly and him being investors outside of their careers, outside of him being a first responder, and take a look at some of these examples of why storage units are the best type of real estate investment that you could be making. And so, Mike, I want to bring none other than what I always say is the reason we're here, the example of a first responder building wealth, Michael Peel. Mike, what's going on, man? How are you?
Morning, sir. How are we doing?
I'm great, man. Hey, I'm excited about this because this is where we actually get to show the proof in the pudding. And so I wanted to see, we talked about this yesterday. We talked about why storage units are so powerful, that they give you so much leverage, right? That it is one of those things where it's one of the best planes to get off the ground, because when you get this plane off the ground, right, you burn some fuel to get the plane off the ground. But when that thing's in the air, man, it's one of the most effective vehicles to get you to where you want to be. So I wanted to see, I know you put together some stuff for us, like show us some examples of real investments that you guys made. And I want to walk through the time, how much money did it really take? How'd you even know where to find these things, right? And without having to become a full-time just real estate investor, like how did you even devote time outside of your career and family and know where to look? So if you could walk us through this and we can talk about that, let's get started and let's show everyone what you guys shared with me that I think is so powerful about this.
Yeah, absolutely, Ron. Yeah, we talked about it yesterday too. Part of this too was investing in ourselves. We knew that this was a journey we wanted to embark on. So we spent, 25 grand on one course and another 20 grand on another course. And another 15 or 20. I think we're 90 grand or 100 grand into this. So we have learned how to do this the right way. 3 projects in, working on 4th project. So I will start working through our slides. Day 5 we talked about, and this is one of these quotes that really changed the pace for us, 10 plus years ago. It says, if you don't find a way to make money while you sleep, you'll work until you die. Obviously that's Warren Buffett. He is very popular in the financial world. And for us, that was important. It's like, hey, if I want to keep building wealth, there's only 24 hours in the day, and I got to sleep for at least, 5 or 6 of them. I need to figure out a way to keep this machine rolling. So it's pretty fun. I'm looking at my phone right now because even this morning I'm getting text messages about, daily deposits coming into our account. So I'm literally sleeping and I'm waking up to money, which is pretty exciting. Talking about self-storage a little bit, we'll kind of recap. Generally 12 to 15% return of cash on cash, which is incredible. Very good in stable and bad economies. And one of the lowest failure rates. It's only 8% failure rate when you get into this business versus, multifamily, retail, etc. The tax advantages are incredible. Cost segregation studies, makers depreciation. There's a bunch of benefits as well. This is always kind of funny when you care enough just to hide the stuff from your bachelor days rather than throwing it all away. It is amazing what people store. And we talked about, people carrying, storing blue jeans for 10 plus years and furniture. People store the interesting things, but it's valuable to them. And so it's valuable to us. So we are glad to help them with that. We'll talk a little more about REITs, real estate investment trust. It's specifically focused on storage. They are a good investment in the market, but I still strongly believe ownership is the absolute way to go. All right, so let's get into our first project. Rami, I think you're still with me, but so this was a Big Sky Self-Storage. This was up north. We found this project through everything that we learned and how to navigate. There's a lot of like fluff in the market, and there's a lot of listings online. You can use like LoopNet. There's some properties there, but we found a different way to find properties to actually find the right property in the right location. So utilizing that method, we ended up finding this location. This was our first property or project that we started on. And if you notice here, so it was a purchase price of $975,000. We only put in 95 grand. I had a little bit of money in a 401k. This was, past life before a first responder. I borrowed a little bit of money from family. And then we owner finance this project. There's still plenty of these deals out there. You just have to know how to find them. And that's something that we've done a pretty good job at over the years. So if you can learn how to do it right, then you can find these owner finance deals. And these are generally some of the best ways to get started. Specifically because there's major tax advantages for the owners who are selling, and it allows us to negotiate the terms rather than dealing with lenders, especially banks. Some of the objections I've heard, hey, I have no history, no one's going to give me money. Well, they will, but this is also a really good way to get started and build that credibility. I did about 100, or go ahead.
Really quick. So you said a couple things there, man, that were like major that I wanted to just see if you could clarify for us. Sure. That are incredibly important as we kind of look at how you guys did this in these deals. So number one, we've used this word a couple times. So just so everyone's on the same page, right? Like when you say cash on cash return, what do we mean by cash on cash return, guys? Because this is something that's incredibly important that most people don't know as it relates to evaluating a deal. So when we say cash on cash return, Mike, break that down for us. Let's use that example, right? You talked about yesterday. This was just a rough example, so we'll use some real ones. But we said, hey, what if you find a storage unit? This is my best rendition of a storage unit, guys. I'm not an art major. So there we go. There's a storage unit. So let's say you found a storage unit, it's $2 million, and you had, 20% down, which is meaning, I had to, or a first responder had to bring $400K to the table. How do you calculate cash on cash return, and why is that important?
Yeah, so that's a good question, Ram. So we're looking at cash on cash return of the money that we basically are pulling out of the project. So when you factor in things like income minus expenses, debt service, which is another term for paying your loan, whether it's owner finance or through a bank, tax consequences, et cetera. What money can I actually take out of this property monthly? You have to annualize that number, multiply it by 12, and then you take that number and say, let's say it's 100 grand that you brought home for the year, money you kept, and you invested $400,000, that would be a 25% cash on cash return. If that makes sense.
Perfect. So basically, total income from the property minus the total expense of the property, you take whatever that number is, let's say it's 100,000, right? And then you calculate what that represents on the money you brought to the table, correct?
Correct.
Perfect. And that's so important because that's a key, guys. Like if I didn't have this money in the property, and I had this money in my 401k, what would the difference be in what this income could create for me, right? Or what this money could create for me? I mean, if you think about 400,000 in a 401k or an IRA, you going into an advisor's office and saying, I want to turn this $400,000 into a monthly paycheck, and them using the 4% rule means that you are going to have $16,000 a year at 4% from your 401k, or $1,333, versus that example of yesterday where it was the difference of $9,700 on cash return. So cash on cash is important because it says the money I took and put in this deal, what type of income is that producing to me, so that I can compare whether or not that was better than leaving the money in my IRA, putting the money in some other type of investment. So I think that's powerful. And then you said an only 8% failure rate. So talk to us about that. Only 8% failure rate. That's kind of key. What does that mean though? Like when you say failure rate?
Well, failure rate is basically the likelihood of somebody starting in this business and being successful. It's generally measured over a 3 to 5 year period. The 8% failure rate is there because the industry is so high in demand, relatively easy to maintain, and your risk is spread out among a number of units. So, for example, let's say you buy a 4-plex or a 6-plex. Somebody moves out and you just lost 25% of your revenue. Well, you still have a mortgage to pay, and you still have property taxes, and you still have expenses for your other 3 tenants until you fill that unit. Now you're out a huge chunk of your revenue. When you spread out your revenue among 100 units or 200 units or 300 units, and you lose 3, 4, or 5 a month, and you're getting them right back, the risk is so much lower, because now it's kind of like the airplane theory. The airplane's going to fly, right? So they're going to fill the seats, do whatever they can to fill the seats, because they're still spending the fuel to get the plane off the ground. They're still paying for staff. They're still paying for maintenance. Let's do whatever we can to fill the seats, because either way, the costs are there. Same idea in storage. If we can spread out those costs among the entire location, entire property, then if I take a hit or two on a vacancy in the month, it doesn't really hurt. The machine's running, but I've got the ability to make that up. Where if the current project we're running right now is 257 units. If I lose a couple units a month, it's not a big deal. They're going to be refilled the next month. But I don't have the risk of losing a quarter of my revenue or half my revenue because something goes sideways with the tenant. I have to deal with eviction laws. None of that stuff comes into play in storage.
Yeah, that's powerful, because think about that for a second, guys. The statistics, the odds are stacked in your favor of being successful. I mean, 90% of businesses fail within the first 3 to 5 years, right? So going the business ownership route, the odds are not stacked in your favor. And yet in real estate, you lose a tenant, and depending on what state you live, the tenant decides not to pay. That becomes a big deal. That asset turns into a potential short-term or long-term liability. Now here, you have this massive success rate because of how in demand, because of how insulated this is from any central system of failure, and the stats are overwhelming. I mean, it's powerful. So I just wanted to make sure, man, because I know that for me, when I saw that, I was like, whoa, that's actually the proof in the pudding. I mean, that's the numbers that are so powerful. And they always say, numbers tell the real story. So it's not just opinions of what we think is better. It's like, show me the comparison so I can assess where do I get the most cash flow and leverage, and in what time frame. So let me let you go back to what you were just sharing with us. But I thought that was powerful.
Absolutely. And I'll kind of hit on that topic too, the idea of multiple units. We're about to implement another rent increase. We're doing these multiple times per year. There's very few industries where you can do a rent increase among numerous units, 100 or 200 units, and instantly add $300,000, $400,000, $500,000 in value overnight, plus the revenue. So very, very enjoyable industry for us. Income expenses, pretty straightforward profit and loss statement. We have loan interest. We got a 6% 25-year with a 10-year balloon. Basically what that means is it's a 6% interest rate, amortized, divided over 25 years. And then in 10 years, we owe the entire payment or the entire loan back unless we try to work with the owner. And that's pretty common. Most owners don't want to carry a loan for more than 10, 15. I've seen some at 20, but generally it's kind of that 10-year mark, and they want to get bought out because they want to move on with the rest of their life. But they're pretty happy getting a 6% loan. And this is the secret about owner financing. If I default on this loan or I manage it poorly, the owner gets the property right back. So they get to actually get the property that they used to manage. They already know the ins and outs. They already know the client base. They got all this money for all these years. And if I somehow, I'm not paying attention or somehow I don't do something right, they get the property back. That's why they love owner finance deals. Annual debt service, keep going down. You've got taxable income, cash flow. We talked about it. So cash on cash, if you look at this, money down was 95 grand. In our first year, we got almost $28,000 cash on cash return. So it's a 29% cash on cash return. There is no tax exposure because we talked about the certain tax strategies which we can help you with, and it's nothing majorly secret. But make sure you get a CPA, and we'll do this right. But 29%, I mean, that's pretty incredible. And then we took that property over a couple of years from 975 to 1.5. So that's what, a $600,000, $670,000 in equity increase. That's not even the cash on cash return we got. That's not the tax advantages. That's just simple equity we built. So if we sold it, or we want to take our money out of the deal and go buy another one, that was available to us. So pretty amazing model.
That's incredible. So let's break that down. Let's go back there really quick, Mike. If you could put that slide back up.
Sure.
Holly and you, when you guys purchased this property, had to put down $95,000.
Mm-hmm.
Okay. Loan the rest. You didn't have to go to a bank. The owner of it financed that because they wanted to sell this, and that was a good deal for them. And what you guys pocketed was the annual cash flow, that $27,900. That's what went back to Holly and you. Is that correct?
Correct. Yep.
So literally on that $95,000, you guys immediately were effectively pocketing this $27,900 number, which means that on a monthly basis, that created for you guys $2,325 a month in income while you were doing other things.
Correct.
I mean, you didn't have to wait 5 years, 10 years, 15 years to see that $2,300.
Mm-hmm. And this wasn't even the best deal. I think we did good, but there's projects way better than this. This is just our first go at it. Yeah.
Guys, I want you to think about that. Your money is immediately at work. It's paying you while it's at work, allowing you to control this asset. And then, oh, by the way, if we go back to that slide, while Mike and Hall were collecting that income, they grew the value, just like you would grow the value of your 401k of the property from 975 to 1.55 million. How long did it take for the value to grow to 1.55 million, Mike?
That was about 2-3 years, and we could have done it faster if we, some of the techniques we know now. What's the saying? If you know now what you knew then, or you wish you knew then what you knew now. We did pretty well on it.
That's okay. So let me help make sure that everyone's clear about something. It's highly improbable that you're going to put $95,000 in an IRA, solo 401k, 457, any deferred investment account in the market as a passive investor and turn it from 95,000 to 650,000 of equity while it's paying you $2,300 a month in 3 years. I mean, and guys, like, just so you know, as most of that is very real estate, and not just real estate, but specifically this type of strategy is one of the only things I've ever seen in over a decade plus of investing that has the ability, the consistency, and the proof of being able to do that. Like, that's powerful. But that's not the only one, like you were just saying, Mike. So let me let you continue on with this. But I just wanted to make sure, like, guys, those numbers right there say it all.
Yeah, and this is something that I've heard a little bit, and I'm talking to a lot of people like, hey, I don't have the money. We borrowed this. This was a 401k that I had. We've actually pulled a little bit of money out of our house. We borrowed from family. There's always money available, and if the deal makes sense, the money will find you. This is a pretty small injection to create these kind of returns, and this is just one of our projects. So we can go to the next one if you're ready, Rom.
Yeah.
All right, so this was number 2. This was another rural project. This was a lot smaller, so 300 grand, and then we had some more cash because we used the first one to leverage into the next one. Still not a large amount of money, 70 grand, owner financed, 81 units. We only did about 37, and that went up to about 50 as we maximized the project. We got a little better deal here, 5%, 30-year amortization. So the cash flow is really nice, 5-year balloon, debt service, and we cash flowed about 12 grand. So it's 17% return. And then over the course of a couple of years, we about $300,000 in equity. So this was a smaller project, but it's just an example of these projects are out there. And we actually did really well on this one too. This has been a fun project as well.
That's incredible. Mike, how much time now, obviously in the beginning, you guys were learning, you guys were figuring this out. You were more active and you didn't know then what you know now. So obviously your ability to find, manage and implement the strategy that Holly and you have been able to create on enhancing the value, increasing the returns is so much different today because of the knowledge you possess and the time you've been doing this. How much time were you spending to find that first deal? Like when you guys saw that, how long did it take you from learning about storage units and the strategy to finding that deal?
So it took us a little bit longer because the methods that we were taught, like I said, we spent 25 grand on a course and it was good, but nowhere near the knowledge we have now. I think we took, 4 to 5 months to find that first deal. And now we're finding deals even quicker. So, it was a good course and 25 grand worth, I'm not sure, but all this training we finally learned how to build a system together. So realistically, if someone's getting into this and has the right guidance, like, we're trying to help people do this, get into a first deal in less than 6 months. If you're actively really looking and using the steps that we're teaching you. So in 6 months, when I say you're literally one property away from retirement, you could be into your first project.
Yeah, that's incredible. Okay.
Okay, and that was our second location. Let me bring this back up. There we go. So 17%, not bad at all. Create a bunch of equity. And then we are now on our third project. So I'll bring that up. So this is a little bit closer to home. This was a bigger project. This has been a lot of fun. So we bought this for about $3.5 million. Now, granted, remember with all the time and leverage, we're able to use a bunch of funds from our other projects and pull money out of those deals to get into this one. So we put about $800,000 into this project, 257 units. It's doing about 316 revenue, 129 expenses. We've leaned it out quite a bit as far as expenses because there was a bunch of excess, and then we've bumped the revenue. The interesting thing about this project, if you notice, I put value add project. When we were actually looking at this deal, because we knew how to underwrite it and knew how to read financial statements and knew how to read, the story. Financial statements are a story. If you know how to read the story correctly and you're not skipping, chapters 1 to 7, you're actually reading through it and trying to get into the details. We were able to figure out that the manager was stealing from this owner, wasn't actually collecting all the rents properly on the books, had a bunch of side hustles and side deals. So we got into this project probably $1.5 million under what it should have gone for. So we got it for 3.5, and we were able to get a pretty good deal about it. On day one, obviously, she was fired. The previous manager, we brought in our own team. All these people that we've built for the past 10 years, we basically have that family office put together. We brought everyone in and said, hey, this is what we're looking at. Everyone loved the deal when we were going through it because the benefit of the people we have in place is as we're looking at these projects, I'll send it over like, hey, what are your thoughts on this? Based on your experience, what do you think about this project? What about these financials, this location? Sorry about that. And so they looked at it and say, hey, this is a great deal. So we keep going down the line. We ended up getting a 5% 30-year with no balloon as an SBA loan because now we have a bunch of credibility. We're working with a lender we've worked with for a long time. They love us. The difference with this project, the cash on cash return, because we spent the past couple of years fixing it up, wasn't as strong. But look at the equity difference. So we've built about 3.7 million just in equity on this project because of all the things we've done to fix it, actually get the revenues where they're supposed to be at, fix the expenses, obviously, terminate the person that's stealing from the property. So as of the next probably 2 years, this number will bump to about, we're projecting about 16, 17%, and the value is going to go up even higher. So I can't complain about this project either. This has been a lot of fun.
Mike, let's stop for a second. I mean, that's so let me just make sure we're clear about what these numbers currently based on the reality of you guys owning it and what you guys have done mean. Today, if you and Holly, if you guys decided, your team, that you wanted to sell this property, you purchased it for 3.5, right? The current loan is 2.7, but you could sell that property today for 6.5, meaning that Holly and you would walk away with about 3.7 million.
Yeah, so maybe some fees, but yeah, 3.5, 3.7, sure. Pretty good.
Okay, so let's talk about this from the context because, guys, this is the point. Mike and Holly in all of this. Okay, let me just go to the whiteboard because for me, I'm a visual when it comes to this stuff, and so I got to kind of see things and put things in visual format, guys. I hope you can appreciate that. So let me just make sure, and let's map this out so that we can all make sure that we're on the same page about the time. How much time does this take? The money, how much money do you really have to be able to do this? And the ability, the capability, right? As someone who's brand new, that doesn't have the time to go become an expert and just focus on this because they do have a life, they do have other things going on. When did you first purchase your first mobile home park or storage unit, excuse me?
I believe it was 2009 or 2010. Is that right? Or 11. Holly's correcting me over here. 11 or 12. Sorry.
Okay. 2011. And the gist of that was that property at that time was worth, how much did you purchase it for?
It was just under $1 million. I think it was 950, 975.
950, and you guys put down 95K. Mm-hmm. And the reality of the numbers is it produced about $2,200 a month immediately in income to you guys that you pocketed. The value went up, and by the time you sold it, the equity that you guys were able to walk away with was about 650, which happened in about 3 years, you said, right?
Yeah.
Okay. The second property, when did you purchase that?
That was, Holly, correct me, a couple of years after that project.
I want to say like 3 years.
Maybe 3 years after that first one.
So about 2014. Mm-hmm. That purchase price was how much?
300,000.
300K. Okay. You guys put down how much?
I think it was 70 grand.
70K. Okay. The income it produced to you guys, net of servicing it, was how much?
It was about 16. We had about 16, 17 a year in taxable income.
Okay.
No tax, but that was a taxable income.
Right. So let's say 17K, you're saying, right? Mm-hmm. Okay. So that produced for you guys about $1,400 a month immediately on that 70K. And then the equity by the time you sold it was where?
320,000.
320. And then the current project you're on that you own. When was that? When did you guys purchase that? What year?
That was about 2 years ago. So what's that? 2021?
2021. The purchase price was how much?
355.
3.55 million. You guys put down 800,000.
Mm-hmm.
It was producing, obviously, because it was a value add. You were going to reinvest. You were going to increase and fix things with this one. How much, even having to do all that, was it producing for you guys monthly?
So it was about, I think it was about 100 grand a year.
Okay. So about $10,000 or less than that. Excuse me.
Less than that. So that would be
$8,300.
Yeah. Give or take. Yeah.
Okay. And currently, if you sold it, what would be the equity that you walk away with?
Minus, like, if we did some realtor fees, probably 3.5.
3.5 million. Okay. 2011, 2021. How many years is that, guys? 10 years. Mike, were you just so we're clear, you're a first responder, right? Like you actually have a job.
Yeah. Full time. Oh yeah.
60 plus hours a week.
A lot. Plus training, plus everything. Oh yeah.
Plus a wife, a kid. Okay. Total capital throughout this time, out of pocket, obviously, not in the beginning. Not in the beginning. You started with 95, but it was 965K. Income, 2,200 a month on that first deal for 3 years. That was about 79,200 over time. Transfer that over. How long did you own this property for? From there till 2021?
Yeah, I get about 2020.
About 2020. Okay. So about 6 years. About 6 years. That's about 101,952, assuming Mike and Hall never increased this, which obviously is not the case. Okay. So you actually were able to collect over 6 figures in income while the value of these properties appreciated to where today, if you wanted to, you would be walking away with multiple seven figures. And this is outside of a incredibly demanding career.
Yeah, it's been a fun road for sure. It's given us a lot of freedom too. There's things that our lifestyle was able to give us options as far as things we could do with the family, create memories. This alone allowed me to actually start this career, because if we didn't have storage, I could have never left my previous career. So this gave us the freedom to actually change jobs. And I know there's some first responders too that say, hey, if I can do that, I'm going to get the F out of here. I'm tired of this job, which is fine, because if you can learn the skill set right, you can do that. The freedom is huge. Having the ability to do what you want to do and spend the time with your family because you've got a skill set that allows you that freedom. It's pretty awesome.
So you see Mike's that commercial of while everyone else is running out away from the fire and where the firefights are, he's running to. Most first responders are like, I want to learn this so I can leave the career. Mike used this to come into the career. That tells you guys, Mike's one of the few people I've ever met who really is actually practicing what they preach about, doing things that they're passionate about, as opposed to just things for the sake of money. Because he's able to create wealth, Holly and him have a strategy to create wealth that's not tied to their job. So he can choose what he does. And that's the point. This is the definition of wealth. Doing the things you feel led to do without the fear of not having or running out of money. And it's already been done in 10 years. So this is the point, guys. This is outside of the 457, outside of the pension. Yet Mike still has that career. He didn't go quit what he was doing to go become a full-time real estate investor. Holly and him didn't have to go find $900,000 and then $300,000 and then $3.5 million, because they had a strategy that taught them how to finance these things, creative ways to do that so that they could actually own the asset, leverage the asset, appreciate. And here we are now. That's so powerful. So Mike, let me let you share with us a couple of the additional slides. And I kind of want to bring this together, guys, in the next steps, because this is incredible. And so go ahead.
Yeah, absolutely. So let's see. So this was just an idea really quick. We're talking about the most recent project we're working on. This is us at the top. And if you're looking at, 5x5, 5x10s, these are storage unit sizes. Look at how below the market this project was. So, 5x5 is $1 something below. 5x10s are $1 something. So these are just an example of the projects that we were able to find. When you actually work with a group of people that you work well with, some of these deals fall in your lap. It's amazing. Once we got into our first project, the second one basically came to us. This project came to us. We're getting calls like, hey, Mike, I've got a project that's not, it's coming to market, but it's not on the market yet. Are you interested? I think you can get this for a good deal. And we're able to audit and underwrite these and using our strategies. Like, yeah, this is a great effing deal. So remember, it's if you get started, some of the projects will just come to you. And now we're building, this legacy for our son, Micah, that he already plans. He's like, Dad, I'm going to take over all these properties and we'll be at 10 properties in 10 years. That's one of our visions. But these projects come to you when you actually take that first step. So this is just a quick analysis of how well this one did. And this is one of my favorite quotes as well. Everyone knows Elon Musk, right? Focus on 3 to 5 years down the line. Most people don't realize that the life they live right now, today, is based solely on decisions they made 3 to 5 years ago. So if we really want to build that life, it's not just going to show up one day and say, hey, here you go. Decisions we make today to actually build that legacy is what's going to affect us 3 to 5 years down the road. So Ram, I'll let you finish it up, but thank you guys for letting me share. This has been an amazing journey. And if you've ever got questions, let me know. We can talk about it.
Yeah, so I'm excited about this next part, guys, because again, some of the things we've said, and Mike, I'll have you guys help me with the slides here. But some of the things that we said that are so important, so profound, is that the information that you don't implement, the information that you don't know how to implement, cannot help you. And so again, Mike and Holly are individuals. They're one couple. Shelly and I are one couple. Myself as an advisor, guys, my capacity and ability to sit down and teach and share strategies individually is limited. It's capped. So Mike and I have been talking for, over the last 4 years about this and wanted to be strategic. And so I want to share with you guys what options you have now, because the question is, You've learned how to enhance the returns of your investment accounts through risk management. Okay, you've learned about real estate you've learned about leverage. You've learned about how to take skill sets, learn how to use a skill set that has leverage and tax advantages to create more wealth sooner than later. And you've seen the proof. Mike and I have done that in this conversation. So the question is, what's next? How do you implement? And so what I want to invite you guys into, guys, is what is next. We are going to extend an invitation for those of you who are wanting to actually take action, who want the next 12 months to look different, into what's next. So if we could go to that slide here. So here's what's next, guys, for those of you who choose. Okay. We are going to be doing something called a 6-week Wealth Up course. This course is going to actually be the done with you, where you can actually come side by side with Mike and Hall, with myself, as we actually implement these strategies, not just for us, but for our clients in a more active manner. And so you're going to learn how to use self-storage investing and risk management. I'm going to share some stuff with you guys about risk management that I didn't have a chance to share yet, so that you guys can actually learn how to create wealth in the next 10 years or less. And so let me just kind of break this down for what you guys are about to get, okay? We all understand continuing education. We all understand investing in courses and tuitions. Guys, I've spent over 6 figures in my career as an investment advisor, as an active investor, learning how to do what I do today. Mike and Hall, you heard their story. It took them 10 years. It took them over $90,000 in courses and mistakes and learning and trial and error to do what they've been able to pull off. You are going to, it's not going to take you 10 years like it took myself and it took Hall and Mike. You're going to learn this stuff in 6 weeks. In 6 weeks, in a 60-minute weekly session, you're going to learn how to locate these properties, how to identify where are good deals. You're going to learn how to evaluate the storage unit. Mike talked about the numbers. He broke it down for us. You have to look and understand what the story is about the units. And you're going to learn how to make an offer on these properties. And guess what? Just learning that skill, there's that word, REAP. Guys, just learning the skill of how to identify, evaluate, and make an offer. Do you know that there are these things called real estate investment trusts that you could actually, using a self-directed 401k, invest in, where it's a team of people like Mike and Hall who are managing these properties that you can buy into as kind of a starting place, so that you can actually start to see the value, the income, the leverage, without having to go just do it right away yourself. So we're going to teach you the skill set so that immediately, as you're looking at those funds that are in your 401ks or 403bs or 457s, you can go, well, let me look at the real estate funds and let me identify real estate funds that just invest in storage units. Because I could go do that today. I could log on to if you had the skill set, guys, you would be able to log online and identify which units are following the system that Mike and Hall follow to do this. And immediately, if you had that skill set, then by the end of today, you'd be able to go put your capital to work in a more effective manner just in your investment accounts. So it's not just the money, it's the skill set, more importantly, that's lacking. That's the point. And you're going to learn that in this 6-week course in 60-minute sessions. You're going to have instant replay so that you can watch this and go back through it. Guys, the value of taking 10 years and condensing it into 60 minutes once a week for 6 weeks, the leverage of your time, you're literally leveraging Mike and Hall's trial and errors, the tens of thousands of dollars of mistakes and of triumph, and you're getting that in 60 minutes a week. You're going to get access to all the videos and the first responder community, and we're going to be hosting a bonus Q&A session. No man, no woman left behind, no first responder left behind. So if there's anything that you hear, Rami, Mike, can you explain that again? Hey, I was looking at this deal. You're going to be able to ask us and get clarity. That's valued today at over $9,995 just for this 6-week storage unit course that cost Mike and Hall over $100,000 to learn, and 10 years. It's not the money, it's really the time, right? I keep talking about time value of money, guys. And so that is going to actually be in this community with us, guys, as we're teaching and we're going through this. Because guess what? We're not just going to be teaching. Mike and I are actually going to be looking and evaluating deals themselves so that you guys can actually peek over their shoulder and see this at work. But I talked about risk management as well. Hall, if we can go to the next slide, and why that's so profound and powerful. I've had people sit down. If you go look at our site, guys, which I'll post a link later about to our site as it relates to our financial firm, guys, to actually engage and hire a risk manager like myself to implement risk management outside of the actual fees that they charge to manage the portfolios, to have a comprehensive financial plan put together by a CFP, like one of the CFPs on my staff, is typically anywhere from $6,000 to $7,000 a year just for the plan. You can go look up and work with CFPs, and they're going to charge you thousands of dollars just to put together a plan that then you have to take and go implement yourself. I'm going to teach you guys how to do high-level risk management in just an additional 30 minutes a week. I'm literally going to look at the market for the week, tell you guys what the forecast is for the market, what companies and stocks I'm looking at specifically and why. And in literally 30 minutes, I'm going to show you, hey, if you're a passive investor, here's what I would do. If you're an active investor, here's how you could actually potentially produce income from what's going on this week. And only in this community, I'm going to share with you guys, I'm going to put my money where my mouth is, guys, as an active investor, not as an advisor, but as an investor. And I'm going to show you my own brokerage accounts that I'm actually managing my own capital and which investments and trades I'm putting on so that you can see, so you can learn. It's about the education. And you're going to have lifetime access and replay to those guys. I've sat there with folks who make millions of dollars, advisors, investors who are managing their own money, not just making money giving advice, actually making money investing their own capital, and watched and learned what they've done, the mistakes they've made, how they manage their risk, how they manage their losses, how they make sure their winners are bigger than their losses. It's taken me over a decade to learn this, and tens and thousands of dollars. And I'm literally in 30 minutes a week going to show you, here's the passive way to apply risk management. Here's the active way. That's valued well over $9,995. See, this is the point. It's to meet you where you are, to help you guys be able to take action immediately, to see results immediately. You're going to have to put in the work. But to make 90 minutes a week on your own time around your life to learn these skill sets that are going to amplify your returns and reduce and take away the current reality of having to be dependent on a job, a career. There's nothing wrong with that. Thank God you have that, but to not have to be dependent solely on that is profound. It's well worth 90 minutes a week, guys. We have to show up as adults and take control and ownership of our actions. And the reality is, guys, there's no excuse about time. You know, you've seen what Mike and Hall have been able to do. We've talked about this. And so this is valued at over $9,995, guys. Hall, if we go to the next slide. So what does that mean? That means literally there are two specific skill sets you are going to learn. You're going to learn risk management. So for those of you who want to be able to apply that, you can do that. I'm going to teach you how to do it yourself so you're not dependent on me or any other advisor. So that if you choose to work with an advisory team, it's because you know how to evaluate what they're doing, because you know how to do it yourself, but you're choosing to actually bring on a team of advisors to surround yourself with people who are highly skilled, who are highly capable at executing and taking action so that you can actually accelerate your ability to build wealth. And you're going to learn how to do this as it relates to identifying, evaluating, and making offers on storage units so that not only can you go physically do it with real property, which is the goal, but you could actually go evaluate REITs in your IRAs and your 401ks to find and go, okay, here are some incredible opportunities to leverage money inside of my retirement accounts without having to go physically purchase anything right now. That's going to give me a better cash flow, a better return just there alone. Guys, do you know that right now, if you have investment accounts, you're being charged thousands of dollars a year, depending on the size of your account, hundreds to thousands of dollars a year, every single year reoccurring, and you're out of the loop of really how to enhance those accounts. You're already paying and investing money. You're just doing so passively, and so there's really no leverage. It's no intentionality behind it. So now you can join us in the 6-week Wealth Op course, which is your next right step to creating wealth, leveraging time, and being well on your way to retiring in 10 years or less. But you're not going to have to invest $100,000, $90,000. When you go to www.wealthopchallenge.com/course, you're literally able to join us because this is the first Wealth Op Challenge. We want to make sure that the investment in your education is such that everyone can do it. So you guys being founding members, guys, if you're part of this challenge, you are a founding member, you're literally going to be able to join us for only $19.95. Literally less than almost 1% of what it cost Mike and Hall and I individually to learn respectively the skill sets we've learned to be able to do and create the results we've created, what we're doing for our friends and family who are joining us. You're getting over $20,000 worth of value for $19.95 one time. So we priced this intentionally to make sure that everyone could actually be a part of this. And let me just tell you guys something that you're going to be able to hold me accountable to. I'm going to teach and share strategies with you guys that I believe for most of you, just in what you're going to be able to save in fees and taxes is going to make this course pay for itself on the investment planning and risk management side. Literally, if you actually engage and sign up and join and take action and come back to me after 6 weeks and say, Rami, I do not see a way to actually have this course pay for itself in just the strategies you've shown and how that's going to be able to reduce my taxes and fees, I will give you your money back. There's absolutely no way, guys, just in my own personal belief, that you go through this next 6 weeks, you actually learn and take action, and you don't see how this pays for itself immediately. And I can tell you now, most people are paying way more just for mutual fund management, index fund management in their portfolios on a yearly basis than the cost of learning these two skill sets. So it's pretty ridiculous. And this isn't some guys, I hope you understand, we've been talking about this for 4 years and just decided to launch this now. Why? Because we want to make sure that with the systems and the structure in place to make sure everyone who's actually getting started is immediately on that path to creating more wealth and actually being able to retire in 10 years or less. So when you guys join and see the next Wealth Op Challenge, the one thing that will be for certain is you're not going to see the price for this 6-week course at $19.95. It will be at a higher price, guys. We're doing this right now because we want you guys to take action. We want you to be able to immediately join us and get going so that by the time the end of the year comes, by the time the holidays come, you are already well on your way. You've already learned the skill set. You're actually in the game, identifying properties, seeing better returns on your portfolios because you're utilizing risk management, and life looks completely different. Make that New Year's resolution today. Don't wait till January. We're already halfway through 2023. You don't need a ton of time, 90 minutes a week. You don't have to go sift through tons of property and figure out how to put it together. Mike and Holly are going to show you the actual proprietary framework that they use. And you don't need to go try to figure it out by yourself. You're going to be able to say, hey, Rami, Mike, here are some deals I'm looking at. What do you think? That first deal, we're going to be able to hold your hand to make sure it's the right deal, that it's something Mike and Holly would invest in themselves. Your investment portfolios, during those 30 minutes, guys, over time, I'm going to go live. I'm going to have you bring on what's going on so I can tell you and we can evaluate these different strategies to see which one makes the most sense based on risk, fees, returns. What you are going to learn and how you're going to be able to look at the market is going to level the playing field between Wall Street and Main Street for you. You are going to be able to work with these institutions versus being worked over by these institutions. I sit down with people all the time and I ask them, can you tell me what you're paying in fees when it comes to their portfolios? Most people cannot actually articulate and show me. Nowhere else do you behave that way. Think about what it costs to go to college, guys, to learn these skill sets, to be able to pass on these skill sets to your kids. So again, go to www.wealthopchallenge.com/course. Do this now before the next webinars we do for the Wealth Op Challenge in the month of August, September, October, November, so that you can be locked in, grandfathered in as a founding member, which also means, guys, there's going to be some additional bonuses that you get access to. You know, a family office is a company that wealthy families go to get all their financial needs met in one. There's a CPA, there's a banker, there's an estate planner, there's a financial advisor, there's a real estate professional. Wealthy families don't piece that together by themselves. And when you join as a founding member, guys, you're going to be able to you're going to be able to leverage our Rolodex of the best estate planners, the best CPAs, the best tax attorneys, the best real estate professionals to work with. So I'm excited about this. That's as much as I'm going to say about that. This wraps up, guys, day 5. Today's day 5, right, of the Wealth Op Challenge. Make sure to take action on this, guys. What it actually has cost to learn this, to be able to do this, and to be here today is profound. And the whole real test of a mentor is your ability to help someone create the results you created in a fraction of the time and a fraction of the cost. If as a coach, if as a mentor, I cannot duplicate what you've done in less time with less effort, then there's no value of having you as a mentor in my life. I'm having to pay the same price. I'm having to go through the same hurdles. I'm having to fight the same obstacles. That's the point of this, guys, is you don't have to go through the same obstacles. You don't have to fight the same battles. You don't have to go pay the incredible investment of time, of headaches, of money, of having to try to figure this out. And so I'm excited for you guys. I'm excited that we're finally here. This is going to be something that is incredibly fun to do because you're going to join us in building wealth for your families, and you're going to be able to watch and see this unfold in other first responders' lives. And so one first responder at a time, we're going to be able to change the dynamic of that industry, especially now where there's so much pressure on first responders with all of these crazy things that have happened over the last few years, that we're actually showing up to help them, help you build wealth so that there is an off-ramp if you so choose to need one. Okay. So I'm excited to see you guys on the other side. You're going to see some emails that go out about the dates that we start. This offer is only good at $19.95, guys, for the next few days, because we're going to be starting this course in about a week. Okay. In about a week 1 of 6 starts. So you're going to want to make sure you're locked in, that you've seen the emails beforehand, and that you're ready to rock and roll. So I'll see you guys. I'm going to turn it back over to Mike and Hall for some finishing remarks, to really hear from this couple as a first responder. I was only willing to do this with Mike and Holly Peel because they're not teachers. They're not teaching from theory about what they think they're going to do. They've already done it. I have thousands of clients, and Mike and Hall know in our firm, who I've helped being able to transition into retirement with more income and freedom and less uncertainty and risk. So this is not teaching from theory. This is sharing and teaching the strategies that do work, that have worked, that will work. And so, Mike, Hall, it's been so fun. I can't wait for tomorrow because we do have some additional bonus days. But guys, go to www.wealthopchallenge.com. Save yourself the time, the money. Don't, feel like you have to go create some Herculean effort of time and figure this out on your own. You don't. Everything is just a checklist, step by step, of what to do. And I'll see you guys there. Talk to you soon, guys. Hey, Holly, can you guys hear me? I cannot hear you guys. I was like, I don't know.
Okay,
if that's
so my phone is like ringing. I have my sister calling me, you calling me, and I'm
happening?
like, now I get it. Now
Yeah.
I get it. But what's
Okay.
crazy about this is I've probably helped run maybe 60 of these challenges. And for some reason, that unmute button, it is my biggest thing.
This is on me. I apologize.
I'm normally over here controlling it. Thank you guys so much for being on. I love that. What we were saying for like the past 5 minutes is thank you so much, Rami. First, just for being here and also for being back tomorrow at 9 a.m. He's going to go even deeper into tactics that you guys need to know. And then secondly, we were saying thank you to you guys for showing up for yourself. You were saying that much better than I was, so I'm going to let you finish that one.
Yeah, at the end of the day, guys, you're showing up because you either want to change your trajectory of your finances, maybe you want to heal some marriage issues, maybe you want to spend more time with your kids, maybe you need some course correction, or maybe just find a new target. We created this over the past 4 or 5 years because we knew we wanted to help this industry. So we created the Wealth Op, looking at it as an operation plan for your life. But part of that comes with you also have to take a first step. I've had all these conversations with people at my department, outside of my department, other agencies in this area, like, hey, I really want to do this. And there's some that have taken action and they're already seeing results. And there's other ones who's like, I want to do this, but I don't know how. I need some help. And there's other ones who are just, yeah, that sounds great, just not for me. But the problem is if we keep doing what we're doing, what's that? The definition of insanity, right? Keep doing the same thing over and over and over and expecting different results. If we're not willing to do this together and make those changes, then we're going to get the exact same results. So we created this, we created the community. This isn't just an afterthought. This is a lot of intention and a lot of thought for years and years and years to get us to a place where we could launch this together. So please join us, take back your financial future, make it to, put yourself in a position where if you do want to retire in 10 years or less, you can say, adios, I'm out, or I can keep doing this because I love it. So let's do this together. Let's have some fun.
That's so good. We look forward to seeing you guys on the other side. I know that it's going to be an awesome 6 weeks with you guys, really helping you get ahead and make those decisions and really learn a skill set. I love that, he compared it to continuing education. I know that he's gone to all sorts of things. And I'm like, oh, another one. But I know that at the end of the day, it's making him better at his job, right? It's giving him a skill set to make sure he comes home at night. And so this is kind of the same thing. It's giving you a skill set to make sure that you actually get to enjoy your future, that you get to be present and take your family on vacations and whatever that looks for, and set your kids looks like for you, and set your kids up for success in their future as well. So we look forward to seeing you guys on the other side. www.wealthopchallenge.com/course. And we'll put that in the email as well as the Facebook group and the YouTube channel for you guys. See you guys tomorrow at 9 a.m. Pacific Standard Time. We'll be back with Rami going even into deeper tactics that you guys need to know. Tomorrow is a can't miss. You will not want to miss session. So we'll see you tomorrow. Bye.
Bye, guys.